Welcome back to Boni's Life, where we decode the crypto matrix one chart at a time. I'm Boni, and today we're diving deep into what I like to call the great crypto crossroads, a moment where technical analysis meets fundamental reality in our $2.2 trillion crypto ecosystem. Now, before we start, let me address the elephant in the room. Bitcoin just touched $114,920 this week, and I know half of you are celebrating while the other half are wondering if you missed the boat again. Well, grab your coffee because today we're going to dissect this market like a Swiss watchmaker examining a Rolex, with precision, patience, and just enough skepticism to keep us profitable. You see, the crypto market doesn't care about your feelings, your mortgage payment, or that vacation you've been planning, but it does speak a language, a beautiful mathematical language of patterns, volumes, and human psychology. And today we're going to become fluent in that language across three distinct time frames: short-term scalping, mid-term swing trading, and long-term position building. Let's start with where we stand today. August 25th, 2025. Bitcoin is trading at approximately $111,689, sitting comfortably in a $2.22 trillion market cap. But here's what the headlines won't tell you. We've seen $839.69 million in liquidations over the past 24 hours alone. That's not just a number. That's 166,478 traders who learned expensive lessons about leverage and risk management. The Fear and Greed Index has cooled from 72 last month to 47 today, a textbook example of market sentiment shifting from euphoria to neutrality. This isn't necessarily bearish, it's actually healthy. Markets need to breathe, and when greed reaches extreme levels, smart money starts looking for exits. Our total open interest sits at $191.38 billion, down 11.67% from recent highs. This deleveraging is significant because it suggests the market is resetting for the next major move. Think of it as a coiled spring. The more compression, the more explosive the eventual release. For our short-term traders working the 1-minute to 4-hour charts, this market is serving up opportunities like a Vegas buffet. But just like that buffet, you need to know what's fresh and what's been sitting under the heat lamps too long. Looking at the 4-hour liquidation data, we are seeing $78.38 million in forced closures, with 88.92% being long positions. This tells us two critical things. First, the recent pullback caught over-leveraged bulls off guard. And second, we're likely approaching a zone where short-term buying interest could emerge. The volume profile is particularly interesting. We're seeing $75 to $81 billion in 24-hour volume, representing a 107% increase from the previous day. High volume during price consolidation typically precedes significant moves. The question isn't if we'll see volatility, it's which direction and how prepared you are to capitalize on it. For scalpers, the key levels to watch are the 110,635 support that held during yesterday's dip and the 114,920 resistance that capped our recent rally. Between these levels, we have a $4,285 range. Plenty of room for quick profits if you're disciplined with your entries and exits. The RSI on the 4-hour chart is showing divergence, suggesting momentum is shifting. Combined with the liquidation flush we just witnessed, this creates a setup that favors contrarian plays in the short term. But remember, in crypto, being early is often indistinguishable from being wrong, so wait for confirmation. Moving to our daily and weekly charts, the picture becomes even more fascinating. We're in what I call the institutional accumulation zone, a period where smart money quietly builds positions while retail traders get shaken out by volatility. The weekly chart shows Bitcoin has been consolidating in a massive ascending triangle pattern since the beginning of 2025. The apex of this triangle is approaching, which historically leads to explosive moves. Given the fundamental backdrop we'll discuss shortly, the probability favors an upward resolution. Our moving averages tell a compelling story. The 20-day EMA is providing dynamic support around $108,000, while the 50-day EMA sits at $105,500. As long as we maintain these levels, the intermediate-term trend remains bullish. A break below the 50-day EMA would signal a deeper correction, potentially targeting the 98,000 to 102,000 zone, where the 200-day EMA resides. Volume analysis on the weekly time frame reveals something crucial. Each dip is being bought with increasing volume, while rallies show decreasing volume. This is classic accumulation behavior. The smart money isn't chasing pumps, they're buying fear and selling greed. The MACD on the daily chart is approaching a bullish crossover, while the weekly MACD remains in positive territory. This alignment across timeframes suggests we're setting up for a sustained move higher, assuming we can clear the $115,000 resistance zone. For swing traders, the optimal strategy involves building positions on any dip toward the $108,000 to $110,000 zone, with stops below $105,000. Target the $125,000 to $130,000 area for initial profit taking, as this represents the measured move from our current consolidation pattern. Now let's zoom out to the monthly charts and think like institutional investors. This is where technical analysis meets macroeconomic reality, and the picture becomes crystal clear. Bitcoin's monthly chart shows we're in the early stages of what could be the most significant bull market in crypto history. The monthly RSI is at 65, elevated but not extreme. Compare this to previous cycle tops, where RSI exceeded 90, and you realize we have substantial room to run. The logarithmic growth curve suggests Bitcoin's fair value today should be around $150,000 to $180,000 based on adoption metrics, network effects, and monetary debasement. We're currently trading at a 25 to 30% discount to this fair value, which explains why institutional accumulation continues despite the high absolute price. Looking at on-chain metrics, we see several bullish indicators. Long-term holder supply continues to increase, now representing over 75% of the total Bitcoin supply. This is significant because it reduces the liquid supply available for trading, creating a supply squeeze that amplifies price movements. The network value to transactions ratio suggests Bitcoin is fairly valued at current levels, neither extremely overbought nor oversold. This provides a stable foundation for continued growth as adoption accelerates. Perhaps most importantly, the stock-to-flow model, while imperfect, continues to suggest Bitcoin is undervalued relative to its scarcity. With each halving event reducing new supply by 50%, the mathematical inevitability of higher prices becomes more apparent. Technical analysis tells us what the market is doing, but fundamental analysis tells us why. And right now, the fundamental backdrop for Bitcoin couldn't be more compelling. Let's start with the Federal Reserve. We have FOMC meetings scheduled for January 28th to 29th, March 18th to 19th, May 6th to 7th, June 17th to 18th, and September 16 to 17. Each of these represents a potential catalyst for crypto markets. The Fed's current stance on interest rates directly impacts Bitcoin's attractiveness as an alternative store of value. With inflation remaining persistent and government debt reaching unprecedented levels, Bitcoin's fixed supply becomes increasingly attractive. Every dollar printed dilutes the value of existing dollars, but it cannot create new Bitcoin. This mathematical certainty is driving institutional adoption at an accelerating pace. The regulatory landscape is also evolving favorably. The SEC's recent approval of in-kind creations and redemptions for crypto ETPs on July 30th represents a significant step toward mainstream acceptance. We're expecting decisions on Solana and XRP ETFs by October 2025, which could unlock billions in additional institutional capital. Japan's announcement of plans to launch Bitcoin ETFs by 2027 signals global acceptance of crypto as a legitimate asset class. When the world's third-largest economy embraces Bitcoin, it's not speculation anymore. It's recognition of a new monetary reality. Corporate adoption continues to accelerate. We're seeing Fortune 500 companies adding Bitcoin to their treasury reserves, not as speculation, but as protection against currency debasement. This trend is irreversible and will only accelerate as more CFOs recognize the fiduciary duty to protect shareholder value from monetary inflation. The energy narrative around Bitcoin mining has also shifted dramatically. With over 50% of mining now powered by renewable energy, the environmental concerns that once plagued Bitcoin are becoming obsolete. This removes a significant barrier to institutional adoption. Understanding how global events impact crypto markets is crucial for successful trading. Unlike traditional markets that close on weekends, crypto never sleeps, making it particularly sensitive to global developments. Geopolitical tensions typically drive capital toward Bitcoin as a neutral, borderless store of value. Recent conflicts have demonstrated Bitcoin's utility as a hedge against currency devaluation and capital controls. This digital gold narrative becomes more compelling during times of uncertainty. Central bank digital currencies represent both a threat and an opportunity. While governments may attempt to compete with Bitcoin through digital currencies, they're simultaneously validating the concept of digital money. The key difference is that CBDCs are centralized and controllable, while Bitcoin remains decentralized and censorship-resistant. Economic sanctions and trade wars increasingly drive adoption of Bitcoin as countries seek alternatives to the dollar-dominated financial system. This trend accelerates Bitcoin's evolution from a speculative asset to a geopolitical tool. Climate policies and ESG investing initially posed challenges for Bitcoin, but the industry's rapid transition to renewable energy has turned this into a positive narrative. Bitcoin mining is now driving renewable energy development in remote locations, creating a symbiotic relationship between clean energy and digital assets. Now, let's get practical. How do you actually trade this market across different timeframes? For short-term traders, the key is identifying high-probability setups with favorable risk-reward ratios. In the current environment, I'm looking for breakouts above $115,000 with volume confirmation for long entries and breaks below $108,000 for short opportunities. Use tight stops and take profits quickly. In crypto, profits can evaporate faster than morning dew. The scalping strategy I recommend involves trading the range between $110,500 and $114,500. Buy near support with stops below $109,500. And sell near resistance with targets at $113,500. This gives you a 2-to-1 risk-reward ratio, which is acceptable for high-frequency trading. For swing traders, patience is your greatest asset. Wait for the market to come to you. I'm building positions on any dip toward the 108,000 to 110,000 zone, with the understanding that we might see a brief spike below $105,000 to flush out weak hands. My targets remain $125,000 to $130,000 for the first leg of this move. The swing trading approach requires position sizing discipline. Never risk more than 2% of your capital on any single trade and always have a predetermined exit strategy. The market will give you multiple opportunities, but only if you preserve capital during the inevitable drawdowns. Long-term investors should focus on dollar cost averaging and strategic accumulation. The current price range of $110,000 to $115,000 represents excellent value for long-term holders. I recommend allocating 5 to 10% of your investment portfolio to Bitcoin with the understanding that this is a 3 to 5 year investment horizon. For position builders, consider using a barbell strategy: 70% in Bitcoin for stability and growth, 30% in carefully selected altcoins for higher risk-reward potential. This approach captures the broad crypto market uptrend while maintaining exposure to Bitcoin's superior risk-adjusted returns. Let me share something that took me years to learn. The market's primary function isn't to make you money, it's to separate you from your money. The only way to survive and thrive is through disciplined risk management and emotional control. Position sizing is everything. I don't care how confident you are in a trade, never risk more than you can afford to lose. The market can remain irrational longer than you can remain solvent, and leverage amplifies both gains and losses exponentially. The recent $839 million in liquidation serves as a stark reminder of what happens when traders confuse leverage with genius. Those 166,478 liquidated traders weren't necessarily wrong about direction. They were wrong about timing and position sizing. Emotional discipline separates profitable traders from the rest. Fear and greed are the market's most powerful forces, and they're designed to make you buy high and sell low. When everyone is euphoric, start taking profits. When everyone is panicking, start accumulating. Keep a trading journal. Document not just your trades, but your emotional state when making decisions. You'll start to notice patterns in your behavior that correlate with your trading performance. This self-awareness is invaluable for long-term success. As we wrap up today's analysis, remember that we're witnessing history in the making. Bitcoin's evolution from a cypherpunk experiment to a $2.2 trillion asset class represents one of the most significant financial innovations of our lifetime. The technical picture suggests we're in the early stages of a major bull market. The fundamental backdrop supports continued institutional adoption. The regulatory environment is becoming increasingly favorable. And the macroeconomic conditions that drove Bitcoin's creation, currency debasement, financial surveillance, and centralized control, are accelerating. But success in this market requires more than just bullish conviction. It demands discipline, patience, and respect for risk. The market will test your resolve, challenge your assumptions, and humble your ego. Those who survive and thrive are those who adapt, learn, and never stop improving their craft. Whether you're a short-term scalper, mid-term swing trader, or long-term investor, the opportunities in this market are unprecedented. But remember, in crypto, fortunes are made by those who think in decades, not days. That's all for today's episode of Boni's Life. If this analysis helped clarify the current market environment, smash that like button, subscribe for more insights, and ring the notification bell so you never miss an update. The crypto revolution is just getting started, and I want you to be prepared for what's coming next. Until next time, trade smart, stay humble, and remember, in the world of crypto, the only constant is change.